Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the euro kind of hold a bit steady here after the fall we saw yesterday. And we did get some German data come in here, so let's go to that. And that was German IFO index came in at 94.6. They were last expecting 94.4. Current conditions came in at 98.5, just a bit stronger, and expectations at 90.8, a little bit weaker. That's probably in line with everything that's been going on here. Not a big reaction in the euro, as I mentioned. Yesterday, we came into a support area that we had been looking at. And that was here at this 965. We actually had this, our buy chart coming into the week for 966, which is because this came in at 65.9, and that's where we found support. Also, one of the things is not only was the market, it's a bit oversold here, but we had also mentioned, I believe it's on Thursday, there's a $5 billion option expiring at 110. So it would behoove those that are stuck with that option to make sure they defend that area. And what better area for that to come in and try and defend it and hold this euro. And I think that we could be above 110 potentially before we get to Thursday. So it doesn't surprise me we're sitting right here. Maybe a little bit that we haven't exceeded 110, but I think that's when, those that are stuck with that 110 option or defending it may want to go on and same way they defended it as we got down there, probably step on the gas a little bit and try and make sure they push that up a little bit higher, although Thursday's a bit off before we get there. Cable still holding around yesterday's lows, bias chart lows, which was 24.22. We're still holding that. Essentially defended it. The low, I think, was 24.13. We've kind of popped up a little bit and we're rolling back here. Dollar CAD still, as I quote, say mired in this 50 pip trading range. We have seen the peso work up a little bit higher. We actually finally challenged this 1950, but it's got some work to do. Bulls need to get a daily close above 1960 to really get some momentum generated on this. Dollar yen did hold in here. We've kind of pushed up a little bit higher, but it's still rather woeful when you consider the rebound that we saw here in equities. And here we are still, relatively weak, so you would thought we had a bit of bounce. So if equities were to roll over, holy smokes, you have to wonder where the yen would be then. Kiwi defended Friday's bias chart support, which was also Monday's at 62.55. We moved up a little bit higher, but nothing of great significance. We do have RBNZ coming up. They expect rates to be hold steady, so we could see a nice little pop. That being said, we've seen the Euro Kiwi pair back a bit. It's actually exceeded the 23%. We'll go and take a look at that. You can see here we'll go and tap on here. So we've gone and paired back in here and just past this 23% area here. It's susceptible. I mean, we've had a pretty good run so far already with the Euro Kiwi. And we were taking a look here at the gut. I want to take a look at the Kiwi versus the yen. I'll hold a little bit better here. As we saw the guppy still a little bit on the weak side. And starting out has also rolled back a bit. Aussie Yen, nothing to write home about. We're still pretty close to these lows here. Let's go and take a look at another area. So gold's working up a little bit higher. Equity weakness gave us that boost, but we started to come in towards the end of the day. You can see here with equities, and boy, did they put in a little climb. They actually did that um, in the after hours. You can see here we pushed up here in the equities. I never got my level at the time during the regular session at which was going to come. I moved it from 29.99 to 30.03, and I I did not come in during the after hours, even though we did make a move here and I had a chance to get short. And I thought, you know what, I'm just going to go and wait. I really didn't know what was going on here, why we had jumped up so strongly. Now, I know one of the things I looked at was Tokyo was coming back from trading, so they had opportunity. And maybe some people got caught short, it provided an extra little bit of a bid. We came back down. And we hung around them thinking, well, you know what, I'm not going to put myself in that situation. Actually, we're still holding above 3,000 right now. So we'll see what happens here. But we had certainly put a little bit of a squeeze on there. I mean, if you're holding longer term, which isn't my style, I don't think there's anything wrong with getting short up in this area here. But like I said, I had my taste of that last week. I was able to kind of escape out of that rather unscathed. But like I said, when this took off, I was like, whoa, I wonder where this came from. And we kind of have dipped back. We jumped back up, and we're kind of holding above this 3,000. But at least see a little bit more momentum building. Speaking of momentum, we've seen this crude oil really roll back. We did go in and see this market come and challenge and even take out the day's highs and the pit close of this 58.60. And then you can see here it's just been down, just been a drip lower here in crude oil. Let's go on and move into the news. Okay, in the morning bid, markets have a lot to cope with. European recession fears and the UK political tension look set to dominate the attention of the world markets on Tuesday, with global stocks steadying overnight after Monday's losses. Eurozone sovereign debt yields on Monday stays their biggest one-day decline since the ECB President Mario Draghi signaled further policy easing in June after September business surveys showed surprising weakness in the region's activities readings this month. Eurozone stocks underperforming. The euro fell back below 110 for the first time in almost 2 weeks, where it remains first thing this morning. With equivalent U.S. surveys coming in much stronger, questions abound about the reasons for the European corporate angst, and with the trade wars, Brexit, and higher oil prices are taking a bigger toll on the region. One of the reasons I wanted to go and also be short oil or looking to sell oil but yesterday is that not only did we see the news, and that came in during the European session, not only did we see the week of PMIs, and that kind of put a ding in oil, but we also saw on there that we had that they were staying with it, true or not, that within a couple of weeks, Saudi oil installations, everything be back up and running. And I was like, it's a little bit, I don't want to say far-fetched, but a little bit, I can't think of the right word, whether it would be exuberant, but which it certainly isn't. But I mean, to think they could come back on. But that being said, that's what the market trades on. So I was thinking, well, God, concerned with the oil is you just have to want to be a seller. So, like I said, you would think that we might push a little bit lower, and we have. But the only thing we've been doing is basically dripping lower. But when you look at the concerns with recession fears, I'm thinking, how can oil be at this price? You would think it would just be the safer side, would just be playing it on the short side. It has been moving lower, but it's all been moving lower, albeit a drip. Anyway, that being said, let's go and move on. Prices are taking a bigger toll in the region, and whether further ECB easing is doing anything to improve the mood, while acknowledging monetary policy can't alone improve the funk of the economic policy and the fiscal outlook, and the fiscal policy would need to step up. Draghi's testimony to the European Parliament on Monday suggested policy would remain ultra loose for the foreseeable future, and separate speech from incoming President Christine Lagarde indicated the same. Germany's IFO business survey will be watched closely. We talked about that. It kind of came in line overall. I mean, current IFO came in at 94.6, poll for 94.4. That was a bit stronger. Conditions came at 98.5. That was a bit better. And expectations were just a tad weaker. Well, 1 full point weaker, which isn't really a surprise when you consider how everything's been going lately. There's plenty to chew on the UK on Tuesday, too. After more than a week of hearings, the UK Supreme Court will rule at 10:30 London time whether UK PM Johnson's decision to suspend Parliament for 5 weeks before the August 31st Brexit deadline was legal. A ruling against him would not materially change the market's Brexit calculus, even if Parliamentary Speaker John Bercow then recalls the Assembly. But the blow to the Johnson may increase pressure on him personally and heighten fears of a snap election. Meetings between European Union and UK ministers and officials in Brussels and New York, where the UN General Assembly takes place this week, gave no indications of any breakthrough on the Irish border backstop, stalling any deal between the two sides. To add to the confusion, the opposition Labour Party's annual conference on Monday refused to commit itself to either a leave or a remain stance on Brexit before a general election. If advocated a subsequent referendum on which its position remains unclear, starting steady just above 124 first thing Tuesday after slipping back against the remains unclear. Starting, let's see, nothing here. So let's just go and move on to FX. Dollar just higher and sterling shaky for Supreme Court ruling. The dollar held firm on Tuesday as the euro struggled on more signs of economic trouble in the eurozone. Sterling wallowed near a 1 week low before a key Supreme Court ruling on the suspension of the British Parliament. Traders were also keeping a watchful eye on Sino-US trade talks, which is set to resume next month, with constant shifting expectations on the prospect of a deal keeping markets on edge in the past month. The dollar rose slightly against the yen to 107.59 and its targets a basket of other currencies at 98.66. Sterling was also under the gun, wallowing at 24.29. The court will rule whether PM Johnson acted unlawfully when he suspended Parliament. Overall, traders were cautious in line with Brexit uncertainty, Sino-US talks. Data in Asia underscored the fragility of the growth across the region. Japanese manufacturing activity shrank at the quickest pace in 7 months. September, U.S. Secretary Steve Mnuchin told Fox Business News that discussions were scheduled in 2 weeks, that he and U.S. Trade Representative Robert Litzinger would meet Chinese Vice Premier Li Hu. The street wants these talks to make progress, so I'd expect that in the run-up, if there's progress, then we'll see a rally in emerging market currencies, said Jeffrey Halley. But I think the currency markets are in a bit of a holding pattern. They're definitely marking time. The Aussie New Zealand dollars were steady ahead of a speech by RBA Governor Philip Lowe at 10:05 GMT. We talked about that. That comes in right before 6 a.m. Eastern. I think about 10 minutes before, so keep an eye on that. We think Lowe will provide a strong signal that the RBA is ready to cut rates again, endorsing our view of the 25 basis points in October, said Tapas Strickland. Any comments on the scope for unconventional policy will also be critical for the market. So that's something to keep in mind. Let me go on and post this in the chat room just to make sure people are aware. Okay, let's go move into the bias chart. Well, I did the basic technical in Asia. We're going to pretty much stick with that. So I'll go and take a look at that. So for the euro, it says, the euro continues to be under pressure technically downtrend line, and fundamentally poor PMIs. The pair reached the bias chart support of 966. The market is oversold and may gravitate beyond 110 as a $5 billion option expires Thursday. Support remains at 1066 with 1033 the pivot as an immediate resistance. Well, there we go. No changes here on the euro. We've talked about the pivot, this 1033. We've seen the market ebb and flow from being negative to positive to back to negative to back to positive, now back to negative again. There's that 1033 pivot comes in right there. You can see there, coming in right there, 1033. Gets on the right there. You see, that's going to be resistance in the short haul, and 966 is going to be the support. No changes here in the euro. Let's go and move into the cable. So after a stellar prior week, cable retreated lower to start the week, although the pair is holding just above Monday's bias chart support of 24.22 with a low of 24.13. Tuesday's downside risk is 23.73 with resistance at 24.85. Well, we know we've got the big UK ruling. Whether or not or how much that's going to impact it, we shall see. But support is going to come in right there. There you go, 24.73. And I apologize, 23.73. So let's go on and draw that line. Doggone it. No, I always tell people I like to put the bias chart level or key level. I put it in the pink because it's so much easier. You know, if I'm looking across multiple screens and I see, whoa, and I see it's hitting, that jumps out on me, as opposed to the other lines. I'll put in the gradient of thickness here, depending on it's a very key level. You can see here this 2137. And as usual, I always put my touches, my levels through the wicks where you see the most volume. So it's going to be 23.73 for today. Obviously, with that ruling, we could punch below that, but that's where we see some value coming in right there. We could even might be able, market may push even a little bit lower towards this 23.56. But for starters, 23.73. We did mention on the upside, resistance is going to be 24.85. Let's go move into the Aussie. Aussie remains under pressure with Tuesday support coming in at 67.34. This is obviously the Kiwi. Hang on. So the Aussie remains under pressure with Tuesday support coming in at 67.34. Resistance is 68.08 with the key level 68.31 above. So on the daily at 68.31, you can see here on the 2 hour, I've got here 68.34. We'll go with the 68.31 as we indicated on the analysis there. Mox Nicks for 3 pips. That's what Dad used to say. And we mentioned support coming in at 67.34. Obviously, still bearish. Let's go moving now to the Kiwi. Well, we do have RBA coming up, so we certainly have a big opportunity to go and make a change here or see some volatility. Kiwi is doing its best ahead of the RBNZ to defend Friday and Monday's bias chart support at the weekly level of 62.55. We'll go on and move into the daily to get a little bit better look on that. There's that big old 62.55. Boy, that's a huge one too. Okay, look at that. Unfortunately, we slide down there. We're 60. Well, we're making a quick run to 62 cents. But anyway, let's go on and move on. There's a 62.55. So it says Kiwi is doing its best ahead of the RBNZ to defend Friday and Monday's bias chart support at weekly level 62.55. A break lower would open the door quickly to 62.08. Resistance is 63.17 as Tuesday rolls in. So it's going to be 63.17 for starters. Obviously, if we do see the RBNZ hold, we have the potential to move much higher. So we'll go with 63.17, and then next would be 63.61. So let's mark this. I already have the 16, so let's go like that. There we go. And 62.55.08. There. So moving into the dollar CAD. Dollar CAD remains mired in a 50 pip range of bias chart support, 32.56. See right there. And last week's key level of 33.07. Resistance is 33.36. A daily close above opens the next leg up. So let's go move into the daily. You can see here 33.36 on the upside, 32.56. We're just a couple of pips below that. So you can see here. Now we need, like I said, if bulls needed a close above 33.36 to get things going. You can see if we get that daily close, that opens up a new leg potentially for 35. But so it's going to be 33.36. I think we may have had that for yesterday. There we go. And support 32.56. Now we're just hugging the floor on that. So our bias chart support is actually going to come in. Let's move into the 2-hour. It's going to come in right there, 32.24, right there. So today's bias chart will be 32.24. And we're stuck in a range. Let's go move into the peso. Is the dollar peso waking up from its slumber? The pair actually challenged 1950. The pair needs a daily close above 1960 to get momentum going. Immediate resistance is 1956 with support at 1942. So here we are, folks. And immediate resistance is coming at 1956. Right there. Bulls need that daily close above 1960 to get things moving. So we're still giving it the benefit of the doubt because we've had that breakout at 1923. And on the downside, we're looking at 1942. We really don't want to see this pair get below for the 40s. It really needs to hold and really hold at 42, actually. Move on to the dollar yen. The dollar yen did not reach a secondary target of 712. That was today's bias chart support, which was that I'm referring to Monday. We mentioned 736, but felt this could easily be assaulted with the pressure equities found themselves with, the China news hangover, and poor European PMIs, referring to Monday. Equities found a way to climb higher on the back of shorts. Dollar yen is not showing any upside resiliency despite the Asian session finding its boost trading above 3,000. Resistance is going to be 789. You can see right here we've got 788 marked off, so we'll stick with the 789. And we'll stick with the 712. Let's go and move into the cash dollar index. We'll look at the 2-hour. Dollar index found offers at Monday's bias chart resistance level of 98.80. Support will remain the same 98.33 for Tuesday. You can see that here. We had that marked off. With the euro likely to move above 110 as short covering developed on Monday, and a $5 billion option expiring on 110 on Thursday, may find the dollar index back at 98.14. Range market for now. So no changes here. It's going to be, you're looking here with the dollar index, 98.80, 98.33. No changes as bullish. With that, we'll go and move into the cross rates. So big news with the RBNZ today. So the potential for maybe a nice little rebound. Let's take a look at this on the 2-hour chart. That's going to be resistance right there. 68.22. Support. We'll go with 67.44. And let's go move into the euro yen. We did go on to break this trend line, and we've seen for the follow through on the downside. And the thought that maybe the euro may strengthen a bit, then resistance, although I don't think we're going to see it at this time, would be 1874. Good solid support coming in right there. That's 1786. And with that, let's go move into the Euro odd. Still holding up relatively well. Maybe we'll see the, well, RBA Lowe is going to be speaking in about another hour and 20 minutes or so, maybe a little bit less than that. So we're going to go with resistance coming in. Let's go right here. $62.76. We'll head it right there. 77 is fine. And support. Right there. I'm just going to mark this at 62 even. Let's go with Euro Kiwi. Resistance is going to be 75.12. We do see the potential for this euro to strengthen. Not the euro, but the Kiwi. It's going to be right there. 73.67, which is just below this 38%. 73.67. Not that we couldn't get even stronger, but we shall see. Which is weaker in this case. And let's go with 72.97. Once again, because this is going to be a big deal with the RBNZ, so 72.97. Let's move into the Aussie Yen. Once again, RBA's lows will be speaking. Potentially, we can go on and make a drop down here. I don't think it's as bearish as many might believe, so, but still there's that risk to 72.26. Resistance is going to come right there, 73.48. With that, we'll move into the guppy. Sure had a nice run up in here. Obviously, we're going to run into potentially a little bit of volatility with this Supreme Court ruling thing. I'm not sure how much it will move this market. Yen's acting pretty strong anyway, so let's go with this right there. 34.50. $34.73, $34.47, $34.47. Oh, there we go, 34.48. There you go. Support. Let's drop this just a hair lower. 33.13. And lastly, sterling odd. If we see a quick jump, they may just pop above this level. So let's go with, RBA lows comment. So let's go with 84.20. Says on across the squawk in an hour, we should be getting the ruling for the Supreme Court. Once again, I don't know how much of it's going to move this market. Right there. 82.64. We can see the S&P is holding above this 3,000. We had a good little run. Like I said, they really trapped some shorts. And I remember being in that same situation last week when they made a run. And then we kind of had got a little bit higher in the aftermarket or Asian session. And then we rolled back and we caught up a little bit higher than we came off quite a bit at the time. I think we rallied as high as 2010. And then we went as low as 29.89 before we rallied right back. We didn't see that dramatic a move, but here we did make that push. And so, although when you look at it on a 30-minute, we did have these markets kind of pushing. This is key if they had got above 30.13 on the December futures. But they still took a dip back. But once again, this whole headline business and all this, I was, you know what, I'll just stay when I see more volume. Once again, it didn't. I was looking at 29.99, and as we moved higher, I put it for 30.03, but I wanted to see that in the regular session. We opened up in the Asian session. Well, we bolted out there and we kind of hung around here. So we're still holding above 3,000. And we might have really just stuck some people. So maybe we make one more challenge. I don't know. Maybe back up in here before we fade. But I'm not used to trading this in outside of regular trading hours. So I kind of let it alone. And kind of glad I did, even though we did go on and pare back a bit. Gold still holding up pretty steady. Gold actually holding up relatively well. If you think about it, in light of everything, but then technically look at it. We had a nice break on Friday, breaking above this trend line, and we saw the exponential moving averages. And so this pair is still keeping a bid. It actually stayed bid as equities were weakening yesterday. I mean, even throughout the day, as it came off those lows, as soon as they look a little bit weak, we'd see the gold push up. So we're still holding up really very well here, relatively well. Despite where equities are right now. So something to keep an eye on. We open up, if we get a daily close of about 15.29 on the spot, and I think the futures is trading about a $7 premium, add $7 to that. But if we get A daily close above 1529 really opens the door for us to move higher. And certainly the bulls are in control, technically speaking. Crude oil, I mean, it's been a drip lower. Now we're kind of pushing up a little bit higher. We did go as low as 58. I'm not sure what's going to happen. I mean, I think overall, I think this has to go lower because not only did the Saudis basically, with true or not, it's supposed to be all back online within a couple of weeks. But then if you look across PMIs and the whole talk about global recession, then what the heck is crude doing here? So it's a safer bet to be short, but you have to come and pick and choose your levels. So nice little move up here in silver. Now we did get that close above, a 2-hour close above 1854, and they're still defending it, although they dipped below it. Daily close above 1875 really opens the door for us to move much higher. But that's about it. Thanks for joining us here on the European Crossover webinar. See you on the FX Daily Roundup.